You're listening to Toronto's #1 real estate podcast, powered by Watson Estates. The most successful local real estate investing starts right here, right now. Here's your host, broker, investor, and social media influencer, Bradley Watson.
Good morning, investors. Bradley here from Watson Estates, and happy 4th of July to my American friends. We're up here in Canada sending you virtual waves until things can get under control down there, and low-key, we're just kind of keeping our border closed. Today, we're going to talk about all things Toronto real estate. We're going to have some good conversations, some good dialogue from comments that I've received as well, and we're going to start off talking about why have Toronto real estate prices not crashed? Maybe you're asking the same question. I think a lot of us are kind of scratching our head. So we're going to dive into what RE/MAX specifically published this article. It is the #1 article of the day when you look up Toronto real estate in our marketplace. We're going to see what they have to say, and we're going to cover it from all angles. We're going to give biases on both angles. Is that a word? Biases? I don't know. Sounds actually like a Greek god. The Greek god of being overly opinionated. How difficult will it get when we remove this ban on evictions? We're starting to see other provinces doing this, so I want to dive into Halifax specifically, who just removed their ban, to see what is going on over there, so we have an idea of what will happen locally here in Ontario once we do the same. And then we're going to finish this off by talking about stage 3 of Toronto's reopening. When is that happening? What's our timeline like? They asked Doug Ford, and we're going to discuss what that could mean, what that looks like for local businesses here in the GTA. We are #1 on iTunes, Spotify, and Google Podcasts for Toronto real estate, and it's all thanks to you guys tuning in. Whether you're north or south of the border, wherever it is, we all love Toronto real estate. And ultimately, we're pretty much the same country, except, we're cooler. Quite literally. It's funny. The other day, it was 30 degrees. Everyone's like sweating like crazy, right? And now 30 degrees Celsius is hot. But in American, or in Fahrenheit, it's not in Fahrenheit, it's in American. I don't speak English, I speak American. They assume it's still freezing. So no matter what we do, we're still freezing. But guys, our supply of housing is already too short up here. We don't need our igloos melting on us. And then y'all go out and pull out of the Paris Agreement. Hashtag keep the North cold. All right, so we're going to jump into some conversations as it relates to our local market. We're having some fun here, and if you haven't subscribed, please do. We're going to continue to put out wonderful content and really follow the news. Me as an investor, of course, I am a broker, so I have clients who are doing what I'm doing, but I am also an investor, and I want to know where there's opportunities in our marketplace, which is why we set out in this journey, which is almost at 100 podcasts now in the last few months, to track what's been going on. And I'm learning stuff too. We're all in this together. Now, I got a bunch of comments I'm going to kind of trickle through this conversation, but I thought this is a perfect one to start us off. Sanjay on YouTube said, I see lots of homes and condos struggling in the GTA. I do too, in certain segments, especially the ones that are not done up. Agreed. Don't listen to these pumper agents, especially RE/MAX. Oh, okay, come on now. I thought we were on the same team. Well, okay, let's not listen to RE/MAX together. So it's ironic that RE/MAX is obviously a big voice because they are a huge real estate brokerage. And so people listen to them to the point where they are now #1 when it comes to the news of the day. So we're going to dive into the article they published. But of course, we're going to try and give a full perspective. Obviously, I'm biased too. We're all biased. But let's try and look at all facts. And the difficult thing with this is, yes, you can hate on RE/MAX and you can hate that they're optimistic, but you can't hate facts. Like, if they're going to spit facts, you have to accept those facts, and your position needs to be strong enough that despite facts, you still stand on that view. A lot of people would disagree with me on my religious stance. That's fine. I stand on facts as well. We all look at facts, and from there, we create our own faith, right? We create our own perspective or anticipate certain things. And this is what's happening in our real estate market. We have facts in front of us that we are looking at. Based on that, we need to come up with a game plan. So what I like about this article, specifically from RE/MAX, that got all personal, by the way. What I love about this article is they're pretty much wondering the same thing we are, is why is it that Toronto stands ahead of most real estate markets and doesn't seem to be all that phased? So here's the article. Since the public health crisis has affected every facet of the economy worldwide, all eyes have been on the red-hot Canadian real estate market. Closer to home, buyers and owners alike are waiting to see if Toronto will finally witness a drop in condominium and house prices. While it's difficult to project long-term trends, recent figures indicate real estate Toronto prices are far from crashing. I actually received a comment, and I think we might even see this later in the podcast, from someone who said, why is it that everyone else has crashed and Toronto, they've all seen double-digit drops and Toronto has not? That was what he said. They've all seen double-digit drops. We did see double-digit drops. Like, if I have to, just as a refresher for people who weren't here when we started this journey a couple months back, the reason we started this, by the way, the irony of the criticism towards me being biased, is I started this podcast because the market was going down. I wanted to make sure there was a clarity. Yes, if we're going to say the sky is falling, that's fine. But let's look and track the numbers as they're happening and see where this goes, because if there's a buying opportunity, I want in too. So the article continues, according to May figures released by TREB, home prices in Toronto and across the GTA were up 3% year over year, which is not all that exciting in light of the drops that happened from March. When we look year over year, yes, there's some stability, but we saw incredible growth in the second half of 2019 and early in 2020. In the 416 area, detached houses climbed 2.7% and condos picked up 1.8%. Now, I don't know why I'm scratching my head is, because TREB hasn't published the numbers, I guess they just want to stick with TREB. But I've actually looked at the stats. I've already prepared my video for this week based on June stats. So here we are looking at May. And so if I were to kind of summarize what's happening now, just to bring us all up to speed for anyone who missed our podcast yesterday, if you've missed it, go back and check it out. But the big one you're going to want to catch is this coming week when I do a whole breakdown on what's happening in the Toronto market. But the Coles notes for the purpose of this is all housing segments are doing great, except for studios, 1-bedrooms, and 2-bedroom condos, and currently luxury between 2.5 to 3 million, pretty much 6-bedroom units are still behind in their March highs, but I anticipate based on the closing of months of inventory, that's gonna increase too. So really the ones that got pummeled, even now, are the condos. Okay, that's where we're at. Now, fewer transactions, of course, is what we saw happening. We saw a 53.7% decline year over year, and we saw 55.2 compared to April of 2020. I don't really care about this because you know what we're seeing trend-wise on a weekly basis? We are seeing an uptick in the number of transactions and more sales that are happening, which is great news for realtors because that is where we make our money. We don't make our money if your property goes up $100,000. I don't make money on that. I mean, I do, but not in the big picture. The big picture is the buying and the selling and the transacting and the comfort level of whether people all agree market's coming down, market's going up. As long as there is a steady flow of transactions, we're good. Right? We are good. Where it matters is as an investor. And this is the angle that I take on this podcast. But ultimately, average prices have remained resilient. And this is the point of this article from Remax. And they outline a few things to keep in mind as to why that is. So what is happening around in our country's hottest market? The broadest numbers show many people out of work. So, right? Businesses are shut down and rising household debt levels. And actually, we've seen debt levels going down, so that's also wrong. So this is why it's kind of silly, right? We see the mortgage debt increasing, but we don't see actually we've seen debt going down. We've seen what's my word here? I've just had a brain fart. The not foreclosures. Where's my bankruptcy lawyers? That's the word. We've seen bankruptcies and insolvencies. That's the one I was looking for. We've seen insolvencies going down, right? So here's some of the things that they're saying is what's a sustaining activity in the number of buyers compared to available listings. And if I were to add one point before all this that's not in here, is I think generally people are more comfortable looking at your house than they are you looking at my house. Because I have a listing on right now, and just yesterday I got a bunch of showings. And it's a good thing these people cleared out for the weekend because, I mean, you tell them wear protective equipment, but you don't know. You might want to wipe that down when you get home. Do you know what I'm saying? Whereas when you're buying, you don't have to touch anything. It's like a wax museum. You just looky. So here's some of the things that they're pointing out. Those who have kept their employment and refrained from dipping into their down payment savings are in a good position because they now have lower borrowing costs, right? So now you're in a position where there was a 50% basis point drop and we sit at a benchmark rate of 0.25%. So it's cheaper than ever, right, to borrow money, which is great. That's going to not encourage you to buy, but it's going to make buying more affordable. I mean, this combined with what some people would think would be a pain in the butt, and it is a little bit, but the support from the CMHC and making things more difficult, the recent decision that just happened in July 1st, where you need to it's a harder task to qualify now for a mortgage, has actually supported a lot of the banks and has actually brought rates down almost right away, like immediately. The government implemented a wage subsidy program, right? We've got people being helped on assistance, and the mortgage deferrals is being funded by CMHC. And they've pumped billions in liquidity into the financial system, which makes lenders more confident, because when we initially saw drops in interest rates, we didn't see parallel drops in mortgage rates. Now we're starting to see rates slowly following because they're finding, okay, well, we are being supported and they're feeling supported. And according to the CBA, Canadian Bankers Association, they said 500,000 big bank borrowers, they've said that there's been 500,000 borrowers that have deferred their mortgages across the big banks. We actually just saw it was actually closer to 750. It was over 750 if you take out a little bit outside of the big banks. So there has been 750,000 people on these mortgage programs. And yesterday I was saying my thinking, and this is great, this is where the dialogue happens. My thinking is that, you know what, I think most of the people who are on that deferral program are people who genuinely need deferrals. And that was my stance yesterday. But I have found in the last 24 hours a number of you people commenting, thank you. Oh, I can't say you people. I might lose my job, right, Don Cherry? Terrible jokes. But having heard from you, I know there are a bunch of you out there who are not cash strapped, but maybe wanted to just kind of cover your butts, and you got involved in this. So I haven't seen any reports on that, but this has been a good conversation. That means that, yes, I mean, don't start getting optimistic about the market this early, Brad. You're not allowed. But maybe some of these mortgage deferrals aren't really an issue because it was more for fun. It was strategic, right? But there are plenty of buyers, this is what they say, due to the market-friendly monetary and fiscal conditions driven by Ottawa and the central bank. And then, if you want to hear propaganda, here's your propaganda, okay? This is the propaganda from RE/MAX. The use of technology in real estate. This is what's saving our market. Like, rolling my eyes. Another reason for the healthy level of activity within the Toronto real estate market is the commendable and innovative solutions adopted by real estate professionals to help transactions take place as smoothly and safely as possible. You guys know we were an essential service, so we were allowed to work, but they said it's because we utilized technology, right? We had digital listings because we didn't have those before. Virtual tours, didn't have those before. Video conferencing, I guess that's kind of new, but really, come on. E-documents and electronic signatures, had that, right? When in-person showings are required, agents have continued to show properties under strict safety measures. This is true, right? Like, I'm doing showings now in 30-minute increments to make sure we get more people in the door and they're not crossing paths. But this has nothing to do with real estate. This is just like protecting my co-humans. I'm trying to protect my clients and your clients. I don't want a lawsuit. Neither do you. And we want to be healthy. So, like, is it technology? No. Propaganda. But whatever, if that's what it takes. I think, you know what it was, when all of this started and there was a lot of fear in the market, people, I think, needed something to grab onto. And I think for the old farts in our industry, it was technology. It's like, I'm going to be innovative. I'm going to use e-signatures. And that's going to save the business. And they just held on to it. And now that's like, you've been holding on to it for so long. It's like your little teddy bear that you know, mommy, daddy, don't take that from me. Right. And you're holding on to it. But okay, here's where we're going to get some division. Okay. Get ready to get mad. If you want the market to crash, okay, this is the part where you shut off your ears right now. Okay. Ready? This is the summary of RE/MAX. Okay. So this is where opinions kick in. Over the last 6 weeks, there have been some dire predictions for Toronto and the national real estate market. However, as the plethora of economic data has already highlighted, many of the findings are a lot better than what was forecasted earlier in the pandemic, which is true. That's actually a fact. Although the industry consensus is that the future is uncertain, the economics of the outbreak suggests it is not all storm clouds ahead. The fundamentals of the housing market are the same as they were before the pandemic, namely a huge demand and a short supply. This has not changed, and until it does, you can expect real estate prices in Toronto will not crash. Get angry. Hopefully there is nobody getting angry because you guys got your ears turned off. So Obviously, being optimistic comes with opposition, right? Because if someone said it perfectly in one of our comments a few days back, this idea that if you own property, you want to go up. If you don't, you want to go down. And there's your bias, right? So Dylan, thank you for your comment. He says, it seems a bit early to be calling anything. We'll need to see much more normalized activity. Condos in particular, very weak, and rents are collapsing. Interesting times. And I agree. Rents are collapsing. We've seen that stabilizing a little bit. So this is where it's like, since rents were coming down, we've been tracking that. Like, I'm not trying to hide from where there's negative news. Even as investors, in a lot of ways, I think that's a good thing, because we need to have some stability and affordability in our market. Not everyone can own, right? We need to have a platform where people can actually get into our market. And if they're a renter, I mean, some people might get pissed that that's the case, but if you're going to be a renter, at least you have a place to live, right? But condos, yes, we are seeing that in the stats. So I agree. But I don't think it's too early that we can't make a call, because just a month or two ago, we were saying this is a good buying opportunity. For any of you who've been following us for a while, you saw the switch, right? People who are loyal, people who've been tracking us in part of our family for a while now, we don't just call glamour, right? We try and call where there's opportunities. If you're going to buy something now, it has to be long-term. But a month or two ago, we were talking buying opportunity, great buying opportunity, right? And take it or leave it. If you guys don't want to buy, that's fine. He then says in another comment, market is red hot despite the lack of sales. How does that work? So this, I think, is a big point of confusion. This is a huge point of confusion. Now, a lot of you guys, you track with what we're doing here. You're investors. You get it. You get that sales is not an indication of the health of a market. And sales here, the number of sales was simply a reflex to COVID. That's all it is, right? And we expected that, because we saw China had a drop of over 90% drops in real estate transactions when they were being hit with COVID. And we looked at that before this all happened. So we knew, actually, in reality, if we were hitting the 70s and under 80% drop in sales, that's actually not as bad, right? If you were to look at it from that perspective. But that doesn't necessarily equate to prices. What equated to prices early on was this split between the number of new listings and the number of sales. And we saw new listings rising very quickly, which is where there was a buying opportunity. But we started to also map out when new listings began to come back down and sales lined up. And that happened very fast. That happened in a matter of a few weeks. And now that those two things are flat, I would even argue sales are happening faster now than new listings in most segments of our market, which is going to drive months of inventory back down, which is going to mean prices going up in the short term. Now, that's not talking about what's happening later in the year. I'm just talking about the fundamentals of looking at what's happening and the trends and trying to map out for the next month what's going to happen. So anyways, those are some thoughts on that. Then we have the critics. The critics continue. Greg on YouTube says, yeah, obviously the real estate market in Canada is way overpriced. These agents, government, banks, etc. are all biased. In their minds, it's always the right time to buy across the GTA. Why would the Canadian market want a crash when 70% of Canadian GDP is real estate related? I guess that's true, right? That makes sense. I smell an artificial scam. One of the biggest pandemics happened in world history. Every other country's real estate prices dropped in double digits, but here in the GTA, it barely dropped. That's not true. We did see double digit drops. And if you count sales as a factor, we saw huge drops, right? We saw 70% drops. Interab said, I still have to see a broker who says housing market is bad. This guy just shows up to enhance their broker's PR. That's me. I'm the antichrist of real estate, showing up to mess you guys all up. But I don't understand why we're trying to sow division. Like, can't we all have our own perspectives? It's fine. Take your perspective. It's no big deal. What is this, America? Oh, getting some anger out there. Getting some anger. All right, so in order to paint a picture of fairness, to catch people up that maybe don't know, I'm open to sharing the bad news too. Let's talk about some of the risks that face our market, because if we're going to have this conversation, it needs to be a whole conversation. Condo prices. As I said, coming this week, you've got 1-bedroom studios and 2 bedrooms. You got to watch out. It's going to be a boring month for them, and months of inventory is rising, which is a leading indicator of prices coming down. But stats show everything else. The months of inventory is going down, which means prices are going to go up for the short term, especially in 2.5 to 3 million. That they're actually outpacing because they're still below their March highs. And so they're going to catch up, and we're all going to be holding hands going to the Wizard of Oz. However, this is where we got to jump ship. Q4. Okay, this is the red flag. This is the thing we're all watching for. There are a number of things we need to be paying attention to. Number one is mortgage deferrals. Now, as mentioned, many people confirm they're taking advantage of it without needing it, but still, 750,000 people, that's a lot, right? And so this is one of the things that has led to big banks like RBC or CMHC being very concerned that not only are we going to have an issue, we're going to have price declines, and the worst price declines forecasted from what I can see that are legitimate is a 3% drop from 2020 to 2021, okay? But then a recovery into 2022. This is why we talk about long-term. If you want to be risk averse, take a long-term approach. We also have the risk of a second wave, and we're going to talk about the reopening and what that looks like, but that could be a real problem, not just the second wave, but a reclosure, right? If we pull back the progress that we've made. And the other big thing we need to be watching for is mass evictions, which is what one of the other topics we're going to talk about today. We're going to get there in a second. Low immigration, which directly, whether that's probably because of employment, this is what I've heard, but leading to rentals coming back on the market. So rentals would need to be converted because immigration is not happening. Therefore, they're not, that combined with Airbnb, they're not getting these places filled. Vacancy rate goes up, and the rental market kind of gets pulled out from the seams here. So we gotta figure these parts out. These are the question marks of Q4. And it's also why buying right now is not a great idea if you're trying to speculate or trying to get a deal. There's not a lot of deals to be had. But what I think is actually really funny is I think a lot of these people aren't necessarily investors. I think they just have their home and they think, oh, well, is my property value going up? That's fine. You guys can get value out of our channel. But if you're buying and selling, does it really matter? Like, other than the fact that you gotta deal with this market, it doesn't really apply to you. My suggestion, moving pretty much on an ongoing basis, is for investors, the ones who really need to be paying attention, I recommend buying cash positive properties. That's my suggestion all the time. If you're going to get a deal, great. But let's think about it. If you're going to get $50,000, let's say, on a deal for your house, that's peanuts relative to 250% growth over the last 2 decades. So let's not talk about pocket change. Let's not get our panties in a bunch because we're trying to decide when we're going to buy our first home to live in. That's not a big deal. The big deal here is we're going to get positive cash flow properties with long-term growth opportunities. That's how you invest. That's how you do it. So anyways, I'm going to, yes. Sorry about my optimism. Moving right along. Let's talk about evictions, right? Like, if this is one of the risks of what's coming up, there was an article that came out. I found it on my news feed, but I couldn't find it on anywhere on the internet. I had to search on the actual page. Like, I had to do a lot of digging for this article, but I wanted to get it directly from Halifax. Apparently people in Toronto don't read Halifax newspapers. Here's the article. His name is from halagonia.ca. Thousands of Nova Scotians face eviction proceedings as ban ends. So before we get there, recognize that on Friday, there were no cases in Halifax. In fact, there's only 3 active cases that remain. So their province is well ahead of ours as it relates to COVID. The provincial ban on residential evictions officially came to an end on Tuesday. That's this week, spelling uncertainty for thousands of Nova Scotian tenants. You're going to hear a lot of what we're saying, a lot of what's happening here is mirrored. And so this is going to be a primary indicator of what's going to happen locally. If there's any better way to tell what to expect, it's to see a place that's doing what we're going to be doing a little bit ahead of us. And this is exactly what's happening. According to a release by Nova Scotia's NDP caucus, 2,000 households will face eviction proceedings in the coming weeks. This comes as many Nova Scotians are struggling to secure employment, and the federal CERB program is set to expire in a matter of months. The Investment Property Owners Association of Nova Scotia, or IPOANS, IPOANS, might as well say the whole thing, whose mandate is to, quote, be a positive voice for residential landlords. So this organization recognizes the landlords specifically, provided that figure, the 2,000 households. They also said that they support the end of the moratorium. It's another fancy way of saying a ban on evictions, citing $12.5 million in losses for landlords. So they're saying our landlords are getting crushed. Listen to what they say here. It's been a big impact on our members, particularly the small family-managed operations across the province. The large-scale apartment rental companies can weather the storm. It's the small operations that are family-managed. They have 5, 10, 15, 20, 40 units who cannot weather an extended period of tenants not paying rent. They just don't have the financial capacity to do that. And I agree. However, you get the other side, right? The Nova Scotia NDP assert that allowing the eviction ban to expire is unfair to the families who relied on it. So can you guys hear the same fight that's happening here is there? It's not much different, right? Like we've got landlords that are saying, I'm making no money. I'm getting no support, no government support, nothing. And like I have a job. Like I'm a doctor and I got 3 properties and nobody's paying me. And what am I going to do? I got to sell these places or something. Like what's happening, right? I'm stuck. Not to mention mortgage deferrals are giving me a hard time because they're rental properties. But then you have tenants that say, well, what are you going to do? Kick me out of my house? And I know there's many of them that are taking advantage of this. I know that. Not all of them. You can't paint broad strokes here, but many are. Before COVID-19, we are already in a housing crisis with people facing massive rent increases, sounds like Toronto, and a major shortage of affordable housing, sounds like Toronto. And that's actually getting worse because the affordable housing is coming on slower than affordable housing is leaving. But why do you think they're leaving? Because the government sticks its nose in everything, including rental evictions. That's just one more reason why you're going to see an ongoing problem finding affordable housing. It's so ironic. It's all political. So they asked some questions to some of these guys from Acorn, Nova Scotia. They are an organization that leads for the rights of low and moderate income families. They asked them, is 2 to 8 months sufficient for households facing evictions to reach an agreement to repay backlog rent payments? So the question that they're asking, so you get the issue. It lines up very much like ours. This is what they're currently dealing with because they're in the middle of it now. They're asking, how much time do you need to repay me the rent that you didn't pay? So the conversation isn't, do we just kind of remove it or does it get thrown aside? The conversation is, how are you going to recuperate my losses as a landlord? And this person said, yes, landlords are open to rental payment plans, but they have to be realistic and they have to be meaningful. Obviously, you need to pay it back. You need to show that you're making progress. And they say tenants who fall behind 2 months very rarely are able to get back on track and they require outside assistance. Which brings us to our next possible topic is there's a very good chance that the government will need to step in to support this recuperating of losses. If this is part of the conversation, you're going to need to pay me. The numbers based on what these people are saying who breathe this world are saying 2 months and up, almost impossible. And here we sit, 3, 4, 5 months in and still going. So then another person, 2 to 8 months for a lot of folks may not be enough. That's why we're demanding 2 things, a rent repayment program and possibly looking at a rent grant program to provide tools for tenants to make it easier for them to pay back rent. So although the government didn't step in yet to help pay rent on an ongoing basis, there is still a very real chance that they will need to do it later because it sounds like it's virtually impossible. And if you want to protect these guys from having to get a mass eviction, and forget 2,000 people in Nova Scotia, in Ontario, it's tens of thousands of people. It's so much more. So I think I beat that. You guys get the idea. We need support from the provincial government to address these issues. If one thing is certain, it's that this moratorium has strained tenant and landlord relationships. Of course it has. Of course it has. Maybe if you guys want in the comments below, and if you want to leave us a little line, let us know if you have rental units. What does this conversation look like right now? As landlords, as tenants, what's going on out there? Because I know there's a ton of stories. There's going to be some great stories, and I can share that with our audience. So, mass eviction bill, Ontario, when is it coming? The mass eviction bill, you've probably heard of this idea that we're going to evict a lot of people. There's a lot of people trying to sign petitions to stop it. I'm not going to dive into the details of that. We've talked about it before, but we will in a future podcast probably again. This idea that they're making it so much easier to kick people out, and it has a lot of people angry at the conservative PC, the provincial conservatives. Progressive conservatives. Oh, I can't keep up with these acronyms. All right, moving right along. CTV News had an article. They were talking about stage 3, okay? So, and I want to take this from an angle of, we know businesses are struggling. I was actually speaking with a leasing manager of a very large property management company, and their clientele is retailers. They own many large shopping malls. And I asked them, how many of your tenants haven't paid you rent? Because he's now renegotiating with a lot of them. And he said all of them. No, nobody's paying rent. And so this article dives into, okay, well, what about the small and mid-sized guys? So the small business across Ontario are considering bankruptcies as they sit on the sidelines, according to an advocate for independent business owners. The CFIB, the Canadian Federation of Independent Business, surveyed small and medium-sized businesses, and they found that 16% said they are on the verge of closing their doors permanently as a result of the pandemic-induced shutdown. That number actually sounds low to me. I thought it'd be higher. Maybe it's because we've had a bunch already shut down. Businesses need to start making revenue again. Otherwise, they're just not going to survive. Yeah, I agree. And they made a very good point here. What they said was, if you lose 3 months, you make zero income for 3 months, that really messes you up because you can have an amazing other 3 months of the year and it's still fighting just to break even. Like you're not making a profit because you just lost the 3 months. Like that's a ton of business for the year. Businesses such as movie theaters, gyms, fitness studios, yoga studios, as well as restaurants are restricted to patio dining and have been struggling as they wait for the province to enter the third and final stage. So this is the question to Doug Ford. When are you going to allow us to move into stage 3? And some people would say, I want it right now. That's the American way to do it. I want it right now. Give me stage 3. Ugh. I got my creatine. Got to use it. Ugh. Right? But then we got a lot of people that are like, no, never open. Like, what we got to open for? Screw businesses. I like my CERB. I like my 2000. I'm actually making more than I did before. So we've got this real debate that's happening, but I like the slow movement and slow progression this is me personally. I mean, you can have your own perspective on it. But Doug Ford said he has been lobbied by a number of sectors to reopen the rest of the economy. His government wants to move, quote, cautiously and ensure that the new COVID case numbers are as low as possible. Quote, we'll get there very shortly. So they asked him and he didn't give a very specific day. Ford said the third and final stage of the government would need to be, quote, most all businesses to relaunch their operation, with obvious exceptions like Rogers Centre, Scotiabank Arena, where there'd be large amounts of spectators. Those would be closed. But when asked for a specific timeline, he said he couldn't provide an exact date. We don't need an exact date. We just want to make sure we're moving in the right direction. And we are. Since it's going to be the last stage, we want to make sure our T's are crossed, our I's are dotted, and make sure everyone's safe. You see what's happening when you move too quickly. You see what's happening south of the border. We don't want that happening up here. And on that note, happy 4th of July. Thanks for tuning in this weekend. I'm going to be off tomorrow. I'll probably be filming our video for next week. And I will tune in with you guys early next week as well. Enjoy Independence Day, but don't separate yourself from the world too much there, US. We need each other. For example, those fireworks that you're going to be blasting off, guess where they're made? China. In fact, they're the largest manufacturer and exporter of fireworks in the world. Ironic, isn't it? I'll see you guys later. Take care and keep it real.